Hey, we live? We
Not
are
quite.
live. We are streaming.
Not quite. There we go. Now we're live, Carl.
Are we live?
We're live.
Wow. So we're trying something new today with our amazing proteges. It's the Friday Foundation call. And we're streaming this in YouTube, which is pretty freaking badass. So who've we got on the people probably still coming in, Chris, right?
Yeah, it shows that we've got 30 people so far.
Nice. Well, we're like
And
a minute past.
yeah, let's just wait a minute and get people in. Just so everybody who's on, you have a live chat feature right here in the YouTube, and we can chat back and forth with you. So as you ask questions, we can answer it directly here. We just thought we would do this a little bit different today and do it live on YouTube just to change things up a little bit. And
Yeah.
Carl is going to open up his brain to you 100% for a really massive deep dive Q&A.
Yeah. So
to make sure everybody was ready for this, because this is going to be pretty exciting.
Yeah, awesome. So guys, hit us up. Hit us up in the chat. Just tell us, just announce yourself. Let's see all the familiar faces. So we've got Gordon Collins, we've got Carol Siddle. Hi, Carol. We've got Jay Lopez. We've got the Ultimate Aldean Tribute Band. That's pretty
Greg
amazing.
West. Yeah.
Oh, it's Greg West.
Yeah.
So Greg, what is the Ultimate Aldean Tribute Band? I'm a music guy, as you know, but I've never heard of that band.
Jason Aldean. It's
Aldean.
Yeah, so Jason Aldean is a really famous country singer, and Greg sings just like him.
Wow. Okay. So he's a performing artist.
He is.
As well as a deal maker.
Yeah.
Well, good to see you, Greg. We've got Mona Carter. We've got Christine and Jason. Happy Donut Day. Is it Donut Day?
Yeah, evidently.
Yeah. What's Donut Day? That's real. Like you gotta eat a donut, right? So it's like pancakes. I remember the joke I told you the other day about pancake in England. We have something called Pancake Day. It's a Tuesday in March every year where you have to eat pancakes. So happy Donut Day. We got Kevin Hawthorne from Lakeland, Florida. We've got Mr. Budens. We have got John Cherinsky. Hey, John. Jason Marsh. Jeremy Bronson is in the house. Good to see Jeremy. He's on the Zoom, which is pretty amazing. We've got Don Reynolds, Sean Bressler. We've got my buddy Jason Marsh. We've got John Smith, Cyril Thomas. We've got Nathan Moody. Hi, Nathan. We've got Gordon Collins, Jim Helms. Hey, Jim. Muriel. We've got James Clark, Brian Murphy. Professor Bergstrom is in the house. He's having free donuts at Dunkin' Donuts. So is this for real? Free donut day? You can go and get a free donut today. Is that the deal?
Evidently.
Really? But not in England. We don't have a Dunkin' Donuts where I live.
Really?
Anyway, we've got Antonia Aguilar, Tracy Thompson. How are you doing? Good to see you. We've got Irina. We've got Kevin Hawthorne. We've got James Clark, Ed Lemus, Rafa Spina. We've got Marek, Justin Hertz. Buddy, how are we doing? Justin Hertz is somebody that's added so much freaking value to me, guys, on the real estate side. I bought one of his houses in Orlando, and then I just bought another house, and because I have no freaking idea what I'm doing, he did it all for me. So and he's now in Protege, which is pretty amazing. So good to see Justin. We've got Jeff. We've got Delana Snyder. Jim Helms was wishing someone told him about Donut Day. I get it. We've got Dominic. I can't pronounce your name, Dominic. Berlingeri. Brits, we can't spell. John Peters, Belinda Saw, Michael Reinhold, Scott Rogers. Hey, Scott.
Hey, Scott.
Alrighty, so guys, let's do some questions. If you wanna come on to the stream and be part of this, because we'll send you a link if you want to ask your questions live. If not, just get your questions in the chat, and we'll go through and we'll answer all those questions. So get your questions in. Before we do that, let's talk about some stuff. So we had a really good call, guys, like 2 hours ago. So as you know, myself and Jeremy and Chris Moore and Sarah Lieb, who's one of our other partners, we own a private equity company called Kings of Deals. And we have these 5 really awesome pillars that we've built where we're doing roll-ups. And a lot of you proteges, as you know, are investors in those pillars. We've been working on some deals the last few months. There are several deals that are just a few weeks from closing. So we're all like really, really excited. We found some really cool, innovative ways to do creative financing, which is really, really good. Lets us leverage our capital in much higher ways. And I just love looking at deals and looking at structures and valuations and all those different things. But it's going to be a busy but very interesting next 3 to 4 months, I think, guys. What do you think?
Oh, 100% agree. We got lots of good deals coming close to closing, and it's going to be busy time for Chris. It's my job to go grow things, right?
I know. And hey, guys, can I tell you a really funny story? So not yesterday, the day before, we were on a call with a bank for an $8 million cash flow lend for these 2 businesses we're going to buy in one of the pillars and merge them together. And he's like an older statesman banker, probably in his 60s, in a very conservative bank. And he fell in love with Chris, right? He fell in love with Chris. He was looking, we'd gone through the meeting, we pitched the opportunity, the numbers, all the great things you do when you're pitching financials on deals. And he was like starting to build rapport with us. And as you know, rapport is a massive part of what we teach and what we do. And he kind of leans in, this like 60-year-old guy, and he looks into the screen and he says to Chris, what's that thing behind you? The photo. And Chris is like, hey, it's like an AI picture that I had done and I had framed. It's like, man, that's like crazy. I got to get one of those. And Chris said, well, we'll send you the app. You could just upload your picture and you can get all your photos. He's like, no, I want a picture of you, Chris Moore, on my wall. And then his parting comment was, I want to do business with this guy. Like, screw me and Jeremy. Like, I don't know you, Jeremy, I was deeply offended. But he's like, I just wanted Chris Moore, which is really, really cool. So it's like amazing. And just think about that when you're talking to lenders, investors, sellers, brokers, lawyers, CPAs. We're doing business with people. It's all about people doing business with people. This isn't Wall Street where it's corporations and financial engineering and all that crazy stuff that I used to do. This is people doing business with people. So building rapport, building relationships, getting to know each other, building those connections, having those values aligned. It's absolutely so important. So yeah, Chris, you got a new super fan the other night, and it was pretty cool.
Hey, worse things have happened. It's all good.
So one of those deals that we actually talked about this morning, we got off the call and I sent in an offer. So it's a 12-year annuity deal. So we should hear back here in probably the next week on whether that goes through. So that'll be a really cool business to own. And it's an annuity.
Yeah, sounds amazing.
Love annuity deals. So a couple of things I just want to say before we get into the questions. Are people sending in the questions, Chris? Have we got any questions yet?
Not yet. I just put in there like, hey, everybody, send your questions in the chat. So we need to get some questions in.
Yeah, no worries. A couple of things I just want to mention is we talked yesterday. Yesterday, every Thursday, as you know, we have our red light, green light call, and as you know, we've switched the model over the previous last few weeks to be a self pitch. And, a few people have kind of hit me up in Slack and said, yeah, Carl, I just think you're being lazy. You're not doing the analysis for us and we've got to do it ourselves. And, we thought Protege, you do all this stuff for us. And it's a fair point, but I'll tell you why we're doing it, right? And I mentioned it last night and I mentioned it again. It's really, really important. The red light, green light call for you to self pitch, you're going to build skills and confidence and credibility for when you take your deal and you go and pitch a lender or an investor or even a seller. They're not going to do the analysis for you. They're not going to do the work for you. So we want you to self-pitch inside of our environment. It's a really safe space. We can give you really solid feedback. And if you don't want to come in to the big group where there's 170 people yesterday, you want to do it in a smaller group, do it in one of your community guide sessions, or maybe with your accountability partner, or schedule a 911 call via Kendall and do it with one of the coaches to give you a little bit of feedback. And then you can take that and then move up and do it into the red light, green light by populating the one sheet. Now, it's been made aware to me that some of you are still a little bit kind of new to the financial side of this, and you're struggling kind of mindset wise, taking a set of accounts or tax returns that you'll get from a prospect deal, and then pulling out the right numbers, figuring out the add backs, populating the model, which then drives all the analysis so that we can review it with you on that call. So Sarkis very kindly agreed, because Sarkis does all of that work for us in Kings of Deals. He's also a coach and a very valuable member of Protege. So what Sarkis has agreed to do is a very special 2-part coaching for you from literally just getting a set of numbers from a business and turning that into an absolutely incredible one sheet. So you saw last night on the red light, green light call, in addition to Jeremy's 2 deals that he and Sarkis pitched, Chad and Ed Lemus, they pitched their deal, and that's probably one of the best presentations that I've seen. It was incredible. So they can do it. They've obviously gone through the work of mastering the process, but not everybody's done that. So what Sarkis is going to do in those sessions is really kind of upskill you in terms of your ability and your mastery to extract the key pertinent financial data and stick it into the model. There's probably 5,000 pieces of data in 3 years sets of accounts. You only need about 20 of those numbers. He'll show you what those numbers are, where they go, what they mean, how you adjust them, put them into the model, and then you guys will be absolute badass masters of building that. And then, guys, you've got no excuses then. You've got no excuses not to send those deals in and get on the red light, green light call and get them pitched. I want more than 1 red light, green light call per week by the end of the summer. I want so many deals coming through that have been built and are ready to pitch. We'll have that call every single day if we have to. I want you flooding us with deals that you can then take the feedback, take the analytics, and then go off and close those deals with the blueprints that we're going to give you. And we're not just telling you, hey, it's a good deal, it's a bad deal, this is how we structure it, this is what to look out for. If you were on the call last night, on every single deal that we previewed, we were dropping like golden bombs of value in terms of how you would scale it. Not just me and Jeremy and Sarkis, but Ernie was giving us great ideas about one of the deals. Everyone was coming in with all these phenomenal ideas about growing businesses. And this is the one thing I love the most about Protege, like that we've become this family and we're all in to help each other inside of the community. We all want to win. We all want to do deals. That's why we're here. But everyone's here to kind of help each other and share advice and give feedback. And that's what I always envisioned for this program, guys. I don't know about you, but I'm so pleased the way this program is continuing to evolve.
It seems like it's just continuously evolving, like you're saying, where more of our really successful students are stepping up and doing a lot more peer review, a lot more partnerships, a lot more camaraderie. And that's exactly what we wanted. So I think it's exciting.
Yeah. Well, yeah. I mean, this platform, it helps you, get comfortable, because you never know how that conversation is going to go once you get in front of a finance committee, or, it could go 2 different ways. I've had, meetings where they just drill into the numbers and they want to know, what every single dollar is. Or we might have a meeting like Carl was mentioning the other day when him, Chris, and I were on the call. The guy just wanted to learn about the business, how we were going to grow. I think there was one question about the numbers. So this is great practice to, get in those different types of scenarios, and get those questions and address those issues then. So get those deals in.
Well, guys, we do have some questions coming in. So you ready to do some rapid fire?
Let's go.
All right, let's go.
Let me put a hat on. Should I go Dealmaker weekend? And I'm going to go for the new Dealmaker hat. So we're actually going to buy a company in our portfolio that's going to produce all these things. So we'll have unlimited swag, Dealmaker hats, hoodies. And like, I don't know about you guys, like anybody watch the docuseries Wall Street, WAHL? It's all about Mark Wahlberg, who everybody probably knows is a very famous and a very good, Hollywood actor. But if you go watch the Wall Street series on, I think it's on Paramount or HBO Max, I can't remember. I binge watched season 1 all the way to Australia, and then I binge watched season 2 all the way back. That guy is a freaking badass entrepreneur. Some of the stuff that he's doing is amazing. He's invested in a really high-end tequila brand down in Mexico. He owns an absolutely unbelievable apparel line. Is it Monumental?
I think it's Monumental, yeah.
Yeah, owns Monumental. He owns a massive chain of fitness studios, which he's just gone through an IPO with Wall Street, which was amazing. And he's just got all these amazing businesses that he owns. And he's such a smart guy. Like as an actor, how he's built those chops, how he's built those things. He's done it just by doing deals, just by working the process. He didn't go to business school. He didn't like work on Wall Street. He's a freaking actor, right? He was a rapper, wasn't he? Was he called Marky Mark back in the day? The guy's a freaking rapper and an actor. And normally those guys are as dumb as a box of frogs. He's not. He's not. He's really, really smart. No formal education in business. He's built the right partners. He's really kind of studied these things, and he's just done it by executing and by doing the work. And I think that's what Protege is all about. It helps if you're not as dumb as a box of frogs, and I know none of you are, but some of you have got formal investment banking qualifications. That's great. But most of you haven't. You don't need them. You just need to get the right partners around you, get the right education, get the right mentors. They just get out there and execute and do the work that we set for you inside of the accountability document. But go watch the Wall Street stuff. It's really, really cool.
Well, let's rapid fire. You ready? We got our first questions from Drew. How long should a beginner investor take to acquire their first business?
Wow, that's a really great question. It depends, really. There's a number of variables that will determine the length of time. I'll give you the biggest 3. The first one is how much time you can personally devote to becoming a deal maker. You might have a 9-to-5, you might have a busy family, you might have loads of other hobbies. So you might only have 4 to 5 hours a week that you can spend both learning this craft and then implementing that learning into the market. So it might take you 6 months to do a deal, or if you can spend a lot more time, then you can obviously get work done a lot faster. The second variable is your buy box. So once you've figured out your buy box, if your buy box is absolutely super narrow, then it might take you a lot longer to find a bunch of kind of perfect deals that you want to buy. If your buy box is a little bit kind of broader, then you're going to get a lot more opportunities, kind of come your way. But remember, with your buy box, it's really got to be something that's in your lane, something you know something about, you're passionate about, you can add some value to the business once you've bought it. And if you can't, go and partner with somebody that can. And then the third variable is, irrespective of how much time you're spending doing this, irrespective of your buy box, how wide or narrow it is, the third variable comes down to how you are financing and structuring the deal. If you only want to go and do SBA deals, know that from signing an LOI to buy the business with the seller, it's probably going to take you 90 to 120 days to dance with the SBA and go through all of their processes and get that deal closed. If you're going to do annuity deals, which for those of you who are new and don't know what annuity deals are, there's all the training in the archives about that. That's buying a business like you would lease a car. So they're very, very light on due diligence. There's no external financing coming into the deal for the most part, in most cases. So you can close those deals, a lot faster, 1 to 2 weeks. So those are the kind of three variables, the three major ones that you got to be thinking about when it comes to, how long is it gonna take me? And then what I would do, Drew, is I'd reverse engineer that and say, well, what's my goal? I want to close the business by the 31st of July. That's cash flowing me a minimum of $15,000 a month. That's my goal, and it's in this industry. Then you can reverse engineer that and think, well, okay, I probably need to have a fairly wide buy box because I need to look at lots of opportunities. I probably need to be spending 10 to 15 hours a week doing the work. And I'm probably only going to be looking at annuity deals because by the time I've found businesses and I've met sellers and I've vetted them and I've looked at the financials, then it's probably, I'm only going to have a couple of weeks left to be able to close the deal. So that's an annuity deal structure in that shorter space of time. Anything to add to that, guys?
No, I think you articulated it really well. I think it's just, there's not a one size fits all answer to that question. There's
great
so many
question, though.
Yeah, great question. Let's just keep going because there's lots of them now. So SK says, how do you feel about the bus transport business? $7 million size. I know you've been in this business, Carl. So how do you feel about the bus transport business?
Yeah, I don't like it if it's in the UK because gas is $15 a gallon now. So yeah, I wouldn't buy a transport business in England right now. In the United States, I know you guys complain about the price of gas. Come live in England. It's okay for me. I have a Tesla, so I just charge the thing. I don't put gas in. But I love transportation businesses. I always have. Whether it's freight, whether it's passengers, whether it's people, it's still a great business. I owned one of those companies in the UK, and it was the cost of fuel that really made that business suffer. But in the United States, I love those businesses. But obviously, we only know the size of it, $7 million. I'm guessing that's the revenue. So I'd be interested to know what are the margins on that business? What's the financial trends on that business? What does the balance sheet look like? Has it got a lot of debt inside of it? How much working capital does it need? How old's the fleet of vehicles? How much CapEx might be required going forward? There are a lot of kind of drivers in that industry as well. Again, in the UK, all the major cities now, they're putting these huge tariffs on for emissions. So a lot of bus companies, they're having to spend lots and lots of money retrofitting their fleet with these special devices to limit emissions, or they're having to trade in and get new vehicles. In the United States, I don't think the regulations are strict. I know in parts of California and New York, there's some rules and regs, but the vast majority of the US, it's not that much of a problem. But no, I do like that space a lot.
They have been flirting with us the idea of having a shortage of diesel exhaust fluid in the US. I don't know if that's still going on, but if your buses are all diesel and then there's a nationwide or worldwide shortage of DEF, then that could be a big interruption. So to me, I don't like industries that have too much governmental interference, or where something that's completely out of your control, like a natural resource shortage or supply chain issue, can really disrupt your business in one foul swoop. To me, I stay away from those type of deals. That doesn't mean you shouldn't pursue it. I'm just giving you my risk tolerance. Some things. And then the other thing with that is you got to look at all that equipment. Has it already been fully depreciated? I would look at the age of equipment. There's a lot of stuff that comes into play, but that's just my thought on it.
Yeah. What about you, Jeremy? Have you looked at any passenger transport businesses?
So yeah, similar reasons to both of you. I tend to stay away from those just because the fuel costs can be so volatile. And then also, potential CapEx spend coming into the future, the, more emphasis on electric vehicles and that, going into, trucking industry, probably the bus industry, what's that CapEx spend going to look like going forward? I think we're a ways out on, those types of vehicles in those industries, but just always something I consider, future trends.
And then how's that revenue? Is it contractual? And then when you have that expensive of equipment and it's sitting in a parking lot, you're not making any money. It still has a sunk cost. So just all things to consider. Not my favorite industry, but I think it depends on quite a few things. Next question, Carl. Greg, the ultimate Jason Aldean tribute band here. He has a question. He has a property and a business deal that's a combo, fully occupied, includes a huge remodeled theater. How do I navigate this dual deal?
Yeah, so in a lot of instances, when you look to buy a business, it may have a piece of real estate that the business is dependent on, and that is coming as part of the deal. The seller wants to sell everything, so you're effectively you're buying it as two separate legal transactions. What's always really smart to do when you buy a business that has real estate is you want to carve the real estate out and stick it in a separate company, separate LLC. A lot of businesses that you look to buy, the seller's probably already done that. Why is that a good idea? Because if you're financing the deal and the business gets into significant difficulties and you've got to give it back, then you can keep the real estate and then rent it to somebody else, which is really, really good. So it's always good having that separation, and that's something that you should always do as well. If you buy a software company, put the intellectual property into a separate business, and then you can license that to other people if anything goes wrong with the sales and marketing business that's taking the IP into the hands of the customer. So when you're doing that combo deal, you're going to have two values. You're going to have the value of the business, which you'll know how to do. If you've been following the training, you're looking at the EBITDA numbers, you're recasting them or adjusting them based on add backs and take backs and all those different things. You're creating a 3-year average. You're applying a multiple to that commensurate with the industry and how you're looking to structure the deal. And then you're adjusting for any shortfall in working capital or surplus cash or any inherent debt that you're going to be taking on as part of that transaction. So that's the value of the business. The real estate is a completely separate entity. So let's say you've got a business doing $500,000 of adjusted EBITDA and you're looking to pay a 3x multiple for that. That's a $1.5 million price tag to buy the business, however you want to structure it. And then if it's got a $1.5 million piece of real estate that's coming with it, now it's going to cost you $3 million, again, depending on how you structure that deal, to buy both parts. Now, you don't always have to buy the real estate if you don't want to. The seller might want to keep it, and then you will be basically staying in the facility if you want to stay, and then paying rent. So when that happens, that's called a take back. You need to adjust the profitability for the fact that your cash flow is going to come down because you're going to have to be paying that rent where it wasn't paid before. So you've got to make that adjustment. So you could also have an option to potentially buy the real estate at a later date. Or if the seller's adamant, the deal's got to be done with the real estate, but you don't want it, you can flip that real estate to somebody else. You can sell it to an investor, maybe even do a sub-2 deal. So you can get the real estate out of the deal and then pay the rent to that new owner of that piece of real estate. So that's how you always tackle deals where it's a combo. But most deals are combos. Every business, apart from being an online business, every non-online business has premises, has offices, has a factory, has a facility. And I would say 50-50, they own the real estate, 50% they don't, they lease it. So there's always going to be real estate involved in a transaction.
Great answer. I don't have anything to add to that. I was going to Everything I was
you can answer the next one. You guys can answer the next one.
Oh, let's give Jeremy one then. This is a good one. So Belinda says, how can we know who is a good commercial lawyer or commercial loan lender? How can we screen them?
I would just talk, ask them, what deals that they've done in the past. Have they done deals in, the sector that you're looking at? That would be a good question. And then just get an idea of, what they're looking for in terms of doing deals. Every bank, has a different risk tolerance in terms of what they're looking at. So understand that, some banks have certain industries where they can only lend up to certain dollar amounts within that industry. So, just vet the bank, ask other business people around, have they worked with the bank? How are they to work with, those types of things.
Carl, anything to add on that?
No, nothing to add. Great.
Yeah, I think that's good. Let's keep going because we have a lot of questions. We'll rapid fire. Rod says, what's the best way to add value to a business partner if you're new to that industry? Basically, I want to get into new industries. So how do I position myself as someone that they would want to partner with? I'm happy to take that one if you'd like.
Yeah, you take it. I have a great answer for that, but yeah, I know you have as well. So I'll let you take that.
Absolutely. So Rod, one of the things that I would be focusing on if I were you is more focusing on creating more horizontal skill sets that really feed pretty much any business. There's so many things, like all three of us on the call here, Carl and Jeremy and myself, have horizontal skill sets, as Carl calls them, where you can go into pretty much any business and make a positive impact, whether that's financial, whether that's legal, business growth, marketing. There's all these different ways where you could be pretty much dangerous in every business you get into, right? So what I would be focusing on is looking at what are the biggest needs in those new industries that you want to get in. What type of needs do these business owners have? If you go back to some of my consulting for equity training, there's a slide that said, what do business owners want? And until you can solve the problems that those business owners want, it really doesn't have much leverage for you to want to partner with them. And there's no leverage that you have for them to want to partner with you. And that quick list is, business owners want more time back. They want less stress. They want to shed responsibility. They want to expand to new markets. They want to expand to new products and services. They want more revenue, and they want increased or stronger profit margins. So if you can find ways to tailor your skill sets and package them in a way that you can give business owners what they want, people want to partner with you a lot more. So that'd be my answer. What do you think, Carl?
Yeah, absolutely agree. 100%.
Anything to add? Because you said you had a good answer too.
No, that was roughly the same answer as mine.
There you go. I've been reading your diary, so that's probably why I was able to do that.
I know. Hey, can I just do a quick follow up to Ravi Raj? Kind of jumped off the back of the last question, where if your goal is to cash flow $15,000 per month, what size of business should you buy? So pretty easy to do that. So the first thing that you got to do is if you're netting $15,000 per month, then you've got to look at, well, what's it going to cost you to service that deal? So whether you're doing an annuity deal or an SBA deal or whatever the deal structure needs to look like. Who can tell me, fastest fingers first in the chat, what's the minimum debt service cover ratio that we always recommend you deploy on your deals? What is it? Debt service cover ratio, if you're new, you don't know what that is. It's what is the total adjusted EBITDA or cash flow that the business generates divided by the total amount of cash that needs to leave the business to service you acquiring it. So the interest, any capital repayments on the debt, 1.5. Everyone's nailed it. Great. So if you know you're at $15,000 a month that you want to take out, you know that on a debt service cover ratio of 1.5, so let's say you had $50,000 per month of cash flow coming through that business, and you had, call it $35,000 per month going out in debt service, that would give you a 1.5 ratio. That's going to net you $15,000 per month in cash flow to you. So for you to personally take $15,000 a month out, you're going to need a business doing $50,000 a month in cash flow. So that's $600,000 per year. However, as the owner of that business, you might be able to also take a salary. So you might find that you can save $10,000 or $15,000 per month inside of that overhead, and then you can take the $15,000 a month as a distribution that's net after you've paid the debt, plus every dollar that you save inside of that business, you can take that in addition as well. So there's so that's the way that you do the formula. And then Chris, I love your story. I love your analogy where whenever you're looking at a business, when you're doing consulting for equity, you always ask the question, who's got my money? And I spent a lot of time with Grant Cardone, and he uses that analogy, but your story is a lot better. Why don't you share that story? Like, who's got my money?
Yeah, well, specifically consulting or consulting for equity, I won't touch it at all unless there's money guaranteed. And if you go through the training, I talk about kind of where you are in your stage and whether you can ask for that. But I never take it at face value when a business says, well, I don't think we can afford you. I'm saying, like, well, you're paying somebody my money. We got to go find it.
Who's got my money?
Who's got my money? So and that's a Grant Cardone thing. That's Uncle G for sure.
Yeah.
But in this context, we pull up a balance sheet and we start redlining stuff that they don't need to be spending, and that money can be reallocated to us. And usually there's tons of waste available. Yeah.
Hey, talking about Grant Cardone, I was talking about Grant Cardone a couple of weeks ago. I forgot to mention this yesterday, and somebody, I won't name names, in Protege sent me a really kind of not nasty message, but quite a rude message saying, hey, yeah, you've never met Grant Cardone. You know, he's the GOAT. You know, he's way above your league. You've never done stuff with Grant Cardone. Let me show you this.
Whoever said that doesn't know what the hell they're talking about.
I was in the studio as well. This is me and Uncle G. This was in Aventura, February 2020. It was just before COVID. I went and spent 2 days with Grant, and it was really, it was a really cool experience. Actually, we did a lot of really cool stuff. So I do know Grant Cardone. Just saying. Anyway, what's next? I think we need a really cool question for Jeremy.
I got a question. It says, do you know Grant Cardone? No, I'm just kidding. That's not the question. So Justin Hertz says, I have 3 deals that I have seller meetings with next week. 2 of them have filed their taxes, kind of mixed them together with other businesses. Is this something I should stay away from?
No, I don't think it's necessarily something that you need to stay away from. I don't think that's, uncommon. If you're looking at, some larger businesses, sometimes they'll form what's called a holding company. And then below that, you might have, 2 separate companies from there. I think what's important is, if you don't have a ton of financial expertise, is you get your CPA involved, or get somebody that's familiar with financial statements and try to get them to break it into 2 separate companies and do the allocation that way. But I definitely don't think it's something to stay away from because of that.
I think for me, part of it is looking at how intermingled are they? Are you trying to buy one over all 3 of them? And if it looks like one of the businesses is life support for the other 2, or vice versa, you'd have to really be able to understand what a siloed P&L looks like for each business. So I've looked at businesses like that as well, where maybe we only wanted one of the 3 that are all mixed together, and they have tons and tons of seller add backs, and they're letting the business finance their lifestyle. And when you get that siloed P&L out, it really makes it a more, it helps you logically justify a much lower price as well. And you're able to really see if each business is independent and stands on its own. So I would definitely start with that, Justin, and just say, hey, listen, I'd love to have the conversation. Let's look much deeper and see if we can make this work. I need to see a siloed profit and loss statements for each one, so I really can tell which business is doing what and where the expenses that are shared are coming in and when they're not shared. And I think that would be a great start.
Hey, Chris, permission to do something risky on this call?
You're the boss, dude. Do what you want. Spotlight's yours.
So, so this follow-up question from Selwyn about the real estate thing that we answered before. He's made the point, and it's a really interesting point, and I want to prove it by some really quick financial modeling. I want to build it from scratch inside of about 3 minutes. He said, "Isn't buying the real estate one of the advantages because of the price increase in 5 years? Plus, the business can be split from the real estate in the sale." So what Selwyn's talking about in that comment, if I'm reading it correctly, is that a lot of the upside in the deal that he does is going to come from the appreciation of the real estate. What if I told you that you can appreciate the value of the business 10 times more than you can the value of the real estate by just very, very nominal growth inside of the business that you buy? Would anyone like to see that inside of about 3 minutes on a Google sheet that I'll build from scratch and I'll share with you guys? No, nobody wants to see that. Okay, that's fine.
Yeah, I don't think that's a hit. Yeah. No, I think you should do it. I think we should do it.
Guys, hit me up in the chat if you want to see it. I want at least 20 yeses.
I think there was a delay on it. Yeah, there's tons of yeses coming in.
Oh, okay, they want to do it.
Yeah.
All right. So I'm going to share my screen. I just click present. Yeah.
Yeah, hit present. The bottom one says screen share. Yep.
There we go. So
you guys like this format? It's kind of cool to do something a little different every once in a while.
Right. Can you see the screen?
Now they can.
I can't see you guys. So
yeah, we can see it.
Yeah. Okay. All right. So let's look at a business. So let's look at the revenue. So let's say you find a business and it's doing $2 million a year and it's got an EBITDA margin of 10%, right? So your EBITDA margin of 10%. So our EBITDA is obviously $200,000, right? So this is like year zero. And then let's say we want to go forward 5 years, because 5 years was the goal, right? So $200,000 of EBITDA, and let's say we're going to pay a multiple of probably about 2.5 times for that. So our enterprise value.
Hey, Carl, can you do like a command plus a couple times and kind of zoom in so everybody can see it? It's just real small.
Got it, man.
There we go. You guys see it now? There you go. Yeah, Steven, okay. Steven, you're in mind.
So we got a business doing $2 million in revenue, 10% margin, so a couple $100,000 in EBITDA. Let's say that business is worth a 2.5 times multiple. So we've got an enterprise value of $500,000. And then let's say we've got the real estate in this deal, and let's say the real estate is worth the same amount, $500,000. So let's go forward 5 years. So the first thing that we're going to do is we're going to forecast some growth, right? So what growth can we want to forecast? So let's say we can only grow this business 20% year on year, which is, not that much. If Chris Moore was your partner in the business, it would grow. How much did you grow Dealmaker last year, Chris? 400%?
I thought it was more than that, but yeah.
Yeah, probably more than that. So we're talking very, very modest growth here, right? So let's look at how this business grows in the coming years. So we're going to be at 240. Then we're going to go forward 5 years. So we've now got a business that's doing just short of $5 million. And then, as you know, and I talk about it all the time, every business has fixed costs, right? So you've got a fixed overhead that you can sweat whenever you grow a business. The other thing that happens as well is as you grow and you're buying more stuff from suppliers and all those different things, you get better economies of scale. So your EBITDA margins are going to scale as you grow the business. So you might be able to add 2% of margin every year that you scale. That would be very, very conservative. But let's just keep this really conservative right now. So let's say you can double the EBITDA margin from 10% to 20% over that 5-year period, right? So our EBITDA now goes from 200,000 to about $1 million. right? Now at $1 million, you're probably going to be able to sell that business for at least a 5 times multiple, probably higher. So your enterprise value now is $5 million. So you bought a business that was $500,000 in value, and let's say you did an annuity deal, and you did a 10-year deal on that $500,000, or even if you SBA'd it or whatever. Let's assume after 5 years you probably own half of the money. So you could sell that business for $5 million. You'd probably still owe $250,000 on the deal. So you're walking away with $4.75 million. So you've more than 9x the value of that business without going forward. Like, how much is real estate appreciating right now, Chris?
Well, commercial specifically is not in a great spot. There are definitely great markets out there, but in general, that's not the best appreciating market at the moment.
Do you think, would it grow 5% year on year? Is that generous?
I think it depends. It can grow probably nationwide on average, probably between 3 and 6%. Yeah, I think.
Okay, well, let's call it 6%. So let's look at the value of the real estate over that period.
A lot of its location and utility. So I mean, it's hard to give a generic. We'll just
let's look at the value of the real estate. So let's go forward 5 years. So in 5 years, let's go forward 5 years. So in 5 years, your real estate is worth about $670,000. So how much have we grown? So we've grown the real. We're at 1.33x cash on cash return on the real estate. What are we on the business? Nearly 10x, right? 10x. So your ability to grow the value of a business is uncapped. It's about your ability to drive more revenue, drive higher margins, and then the more transferable the value in the future and the more USP you have in the business, the higher the multiple, right? So I wanted to kind of just display the point in a really quick, simple model that businesses can grow way, way faster and way, way higher than the value of real estate. Was that useful?
I think it's awesome.
All right, I'll come back. There we go. I'm back.
We're back.
There we go.
So we still have lots and lots of questions. Some of you all are asking multiple questions. So if it's going to be the second time I've seen you pop up, I'm just going to keep scrolling so I can get as many people's questions answered as humanly possible. Dominic has a great question. Do we need to have experience in a specific sector to get financing, even if it's not super technical or and they're competent?
Yeah, so it kind of depends on your overall, kind of skill levels. Like for someone like me, Chris or Jeremy, because we've done a ton of deals and we're very well known into the market, we can get financing on pretty much anything. But we'll always partner with somebody operationally that can come into the business and run it for us. A bank's never going to lend you money, or an investor's never going to partner with you in a deal if they don't think you've got the chops to really take the business forward and add value and be a really good custodian. So going back to what I said before about your buy box, if you're trying to do deals outside of your lane, just go partner with somebody because you're going to need that person. You're going to need that person to do the deal because, to your point, no one's going to lend you if you've got no experience at all. But then once you've done the deal, you're going to need that person to kind of help you in terms of scale and growth and operations. So if it's not in your lane, go partner with somebody. That's the single biggest piece of advice I would ever give a deal maker.
And think about a seller looking at you as a safe pair of hands. If they don't have confidence that you are going to be able to take their business and continue the legacy and grow it and do it justice, they're not going to sell you the business. I think lenders are the same way. They want to feel confidence. They want to feel that your C-suite or your group of partners has the ability, the experience, the background, the knowledge, and the expertise to be able to take this business and make it feel like they're doing a safe bet on you. You have to be a safe pair of hands for the lender as well.
Yeah.
So just like some of the calls that we've done recently, part of my role on some of these calls is just giving whoever's on the other end of it extreme confidence in our abilities. Like that's my role. So same type of thing comes true for you all. I mean, if you have no industry experience, go find somebody who can add extreme value to the deal that will give the lenders and the seller a lot of confidence.
Yeah, I would agree. Even as part of, KOD with what we're doing, we have a lot of industry experts that have invested within KOD, and I'll bring them in on call. So for instance, like I was looking at an aviation business, a few weeks ago.
And Dubois.
Exactly. He's a pilot. So I brought him on the call.
Pilot for American Airlines, knows everything about planes. Like, what a great partner and investor to have in that deal, right?
Yeah. So yeah, absolutely. Find somebody that has expertise in that industry, and you're just adding more, more rapport to that deal.
Awesome. Let's keep going. Jay Lopez says, how much time can you devote to becoming a deal maker, really identifying your buy box, how narrow or wide, and how are you going to do financing? So I guess the big question is, how much time can you devote to being a deal maker? Carl has an answer for this.
Yeah, so I think there's two questions in that. I think how much time can you invest in being a deal maker? That's down to you. Find the time. If your why is strong enough and your motivation is strong enough to want to get the fruits and the benefits of being a deal maker, wealth creation, cash flow, freedom, work-life balance, all those amazing things that we seek. It's down to you to create the time. I'd say you need an absolute minimum of 6 hours a week. In this, ideally 10, but there are people in this program that are hitting this full time. And I know a lot of people can't do that, and that's fine, because you've got W-2s and families and all those great things. But you can find 10 hours a week. If you're telling me you don't have 10 hours a week spare, go through the time audit exercise that I share with you in it's in the CEO Fast Start training, and it's also in the 10-day launch training. I take you through a process where you can stop doing things that are not adding value to you. It's my take on the Eisenhower matrix, where it's like, don't do things that you can't do, shouldn't do, or don't want to do. Just spend your time on that kind of unique ability, that really kind of needle moving stuff that's going to take you forward, which is obviously doing deals. And then if you've got a little bit of a budget, you can outsource a lot of these things. You can contract with Mona and Juliana's team that will do a lot of your direct approach outreach. You can go and hire a VA for $10, $15, $20 an hour that can schedule meetings for you, do research. You can hire finance VAs for $50 an hour that, in 1 hour, they'll completely vet a deal for you, build your simple model, and prepare your offer sequence. So, if you want to make 5 offers a week, if you can spend $250 having somebody do all that, again, that leverages you and gives you more time, to do more deal activity. So there's loads of different ways that you can actually do this. I think the hidden question in that, Chris, was how long should I spend defining my buy box, right? And it was Abraham Lincoln that said this: if you give me 5 hours to chop down a tree, I'm going to spend the first 4 hours sharpening my axe, right? So spend as much time as you need to on your buy box until you get it right and it feels good to you. You're in your lane. You can add value to the business. You've got a network that you can potentially leverage. There's deal flow out there. It's a market that's growing, the good margins. These are all the different things that you've got to think about when you determine what industries that you want to go into, right? It's really, really important. And then that takes as long as it takes, because if you think about it, if you're in the United States today, there's over 2.4 million businesses for sale, sub $10 million in revenue, which is our kind of like focal point. So if you don't have a buy box, are you going to look at 2.4 million businesses? You can't, right? Even if you found 100,000 in your state, it'd take you the rest of your life to look at 100,000 businesses. So you've really, really, really got to focus down. We're in a very unique situation right now, in that, unlike the real estate market, There's more inventory in terms of business deals than we've ever had in history, because we've got the baby boomers retiring every day, and they own a lot of the small businesses, that are out there. And then COVID's also increased that deal flow, not because the businesses are broken and are bad. Some of them have fallen by the wayside, of course they have, but COVID's changed a lot of people's perceptions on business and work-life balance and retirement. So if you combine COVID plus the baby boomer effect, we're seeing an unprecedented increase in deal flow. So we're in a very unique position where we can be very, very picky and only look at deals that are really going to kind of hit the bullseye in terms of what your buy box looks like. And everybody's buy box is going to be different, right? Everybody's business focus is going to be different. Mine is different to even Jeremy's. Not in our partnerships, of course, we're looking at the same deals, but I'm looking at a deal on my own and he's looking at deals on his own, and so is Chris. We've all got different kind of requirements. But remember this for your buy box. It's got to be in your lane. It's got to be a deal that you know something about, you can add value to, and you're passionate about. If not, go and partner with somebody. Number two, you want a distressed seller of a good business, not the other way around. You want somebody that's got a really high degree of seller psychology. There's a lot of different reasons why they want to come out of the business. Could be sickness, could be boredom, could be burnout, could be retirement, could be frustration, could be all of those different things. The more motivated somebody is to come out of a business, the more creative you can get in terms of the deal structure, providing that you max out building rapport and you max out aligning your values with the values of the seller. And then the third thing that you need is you need a business that cash flows, right? If it cash flows, you can buy it. If it doesn't cash flow, don't buy it. I've seen a lot of deals recently, distressed deals, businesses that they can be bought for $1 because they're losing money. I would stay away from those deals unless you've got an existing platform business that you can quickly kind of bolt it into, and that business can absorb all of the flies, that are buzzing around that deal. I've only ever done one distressed deal. I did it because Jeremy Harbour bet me I couldn't do it. So I did it. It took me about 3 hours, and it's probably the worst 3 hours of my entire life. I will never do it again, but I won the bet. You give me a bet, I'll make it happen. That's why I did it. So I don't like distressed deals. If you're a turnaround expert, if your skill set is going into a business, rolling your sleeves up, destroying all the nonsense that's out there, and making that deal return to profitability quickly, then you can flip it, then that's your buy box, isn't it? Right? That's not my buy box. I'm not an operations guy. I'm not a guy that wants to jump into the weeds and really kind of get his hands dirty with employees and all those different things. That's why I partner with people that can do all those things, because I'm recognizing that's a weakness for me. My strengths are being able to raise capital and creative deal structuring and building relationships with people and seeing the bigger picture. That's what I'm doing. So I hope that was useful.
I think it was really good. Let's go to a couple more. Carl, I want to be keeping in mind that you have some sort of timeline. We can continue on. What was your timeline? We're at the hour.
I need to bounce here in about 15 minutes. But
all right, guys, great. And I can stay a little bit longer. I've got some cool stuff to share with you. A couple of questions I see that Belinda has I can answer, and I think many of you will want this answer as well. So let's go to Jeshua here. It says, what avenues of direct to seller outreach do you find work the fastest without significant upfront investment? And what's the typical timeline for building consistent lead flow of 10 plus inbound leads a month?
Yeah. So number one, don't go to brokers.
So he's saying direct to seller outreach. So he's already saying,
direct seller outreach. So there's really only 3 ways you can do direct to seller outreach. Number one is you can do the direct approach. So you get a list, you create a letter, you tailor each letter to the business and the owner, and that builds rapport from the very first point of conversation. That is the most effective way to get high quality off market deal flow, but it is an investment in both time and money, and you can obviously balance that by outsourcing a lot of the research. The second way to do it is to build a referral network. Again, doesn't take any money, but it takes time. So using a tool like LinkedIn, go and tap into what I call the deal intermediary network. Because if you're a business owner, bear in mind, only 20% of businesses that actually sell through a broker, 80% sell off market. And that's because business owners, when they decide it's time to exit, they tell 4 people. They tell their CPA, they tell their attorney, they tell their bank or their financier that's partnered with them in the business, and they tell their wealth manager. So if you're connected to those 4 communities in your local area, or in some cases they could be industry specific, if you're building those networks and you're collaborating with people in those networks, then you're going to get phenomenal off-market deal flow. And then the third thing that you can do is you can leverage social media. So you can leverage LinkedIn, you can leverage Facebook. I know when Clubhouse first came on the scene, I used to go live in Clubhouse talking about my buy box, and then the next day I'd have 20 to 30 deals, sent to me. So those are some of the methods. Off-market deal flow does take more time to generate than brokers. Brokers are easy. You go on the website, wow, I like that business, click, download. But we know some brokers are not great to work with. Valuations can be sky high. They could be overvalued. It's sometimes harder to build really solid direct relationships with sellers because the brokers are in the way. And as you know, brokers, they're often shopping the deal around the whole market, and they're playing you off against other people. So off-market deal flow, guys, is always the way to go. Use brokers for practice. If you're new to this and you want to get your training wheels off by looking at deals super quickly and understanding how information is presented, and have a few test calls so you get into the kind of zone of having those conversations. And then when your off-market deal flow starts to kick in and send you deals, then you've had the experience of having those conversations. So that's my thoughts on that.
Yeah, to piggyback off that, I love LinkedIn. The reason I like LinkedIn so much is because they've got great search capabilities. You can really drill down to the size of the business that you want in terms of revenue, the industry. You can look for business owners that have been in the business, 15 plus years. So I'm typically looking for baby boomers because I know there's, a need for them to, probably exit their business at some point in time. And a lot of that's free on LinkedIn. So that would be a great resource to look at. I know Jim Helms is a master at, creating deal flow through that. And I think he's done a training on it. I think he did it in the foundations call, a few weeks ago. So definitely check out that training as well.
Yeah.
You can message support if you need the link, and they can find it for you if you can't.
Yeah, I was just going to say, when Joan was talking about LinkedIn, we have the absolute master of LinkedIn in Jim Helms. He's a protege. He's closed deals. He's now one of our coaches. And he's done 2 trainings, I think 2 trainings on using LinkedIn, and they were both absolutely incredible. I can believe it. I'm an old man, and I thought I knew everything about LinkedIn, but I'm like, man, that is like so cool. It was really, really good. So Jim's put the training in the LinkedIn Slack channel. So if you go to the Slack channel for Dealmaker Protege and you click on the LinkedIn channel, Jim's put the training in there. And Jim, being the absolute giver that he is, I'm sure he'd always love to help people that are trying to use LinkedIn for deal origination.
So Carl, I just found this really cool feature. There's another question. I can just put it on the screen.
That's so cool.
All right, let's go. We got another question. Gregory says, currently working on a marketing agency roll-up. That's cool.
Great idea.
I've been a marketing consultant for the last 16 years, and I have a team in place to take over for their clients. Thoughts? Is this too risky right now?
Chris, I'm going to let you answer that question because you've just sold a marketing agency, and you are the best marketer I have ever worked with in my life. So I'm going to let you answer that question.
Yeah, to clarify, I didn't sell a marketing say I took a buyout from my previous company. But what I would start with is number one is there's some other people in the group that are also going after something very similar. I would connect with them. So reach out to Stephen Holland and just have a conversation. There may be some synergies there. But in general, marketing agencies, I think the big key, and Stephen and I had a call about this last week. We were just chatting. I was actually on the boat, Carl. It's a cool story. I'm on the boat.
You're on the boat. You're on the boat. I almost crashed, right?
The same boat. Yep. So last Tuesday, I'm on the boat. Stephen and I have this quick call. I left my AirPods at home. So I just like put my phone down on the boat deck, put them on speaker. And I swear, as he and I were talking, I was just pulling fish in every couple minutes. So Stephen's my new good luck charm on the boat. Stephen, I'm going fishing Saturday morning at 6 a.m. I will be calling you. Just be ready. But Gregory, connect with him. I would work on being a little bit more specific. Being a marketing agency guy and a consultant, you understand this. There's general marketing, and then there's really focused niche marketing. I think you're going to have a really hard time if you go general. I would probably go niche, and I would focus on rolling up companies that maybe serve a specific type of industry. Rather than having a big generic marketing firm and several of them, I would probably have like a really good SEO firm, a really good web design company. Sometimes those are mixed together. I'd buy a company that's really good with media buy, something else that's doing organic video and YouTube growth. And I would start doing a roll up around that. I don't think it's too risky right now. No. I don't think it's too risky. I think it's risky when you don't know what you're doing.
Yeah, one of the things about so two things from me. Number one, if you own a boat, don't ever let me drive it, because my skills at driving sports cars, unfortunately, do not translate to driving speedboats. Just want to make that point. And then the second thing about roll-ups is roll-ups. You've got to build a roll-up around the central customer avatar. So roll-ups around pick a market, pick a customer demographic that you want to serve, and then buy the businesses around them whose products and services that customer's always going to need. So with marketing, Chris has given you all the different flavors of that. If you wanted to do like a roll-up in, say, home services, you might start off buying an electrical contracting company, but then that customer could be a homeowner, or it could be a small business. They're going to want plumbing, they're going to want roofing, they're going to want maintenance, they're going to want window cleaning, they're going to want pest control. So you can go and acquire all those businesses and build that ecosystem around that central customer, because then what you'll then get is all these different types of businesses with all the same customer type, but the customers are mutually exclusive inside of all those different businesses. So then you can cross-sell. You can sell the electrical services to the plumbing customers, to the roofing customers, to the pest control customers, because they're all going to need those services. So you get this phenomenal cross-selling of products and services. And at the same time, when you bring all these businesses together, there's tons and tons of financial synergies that you can enjoy, not just through economies of scale, through supplies that you need to buy, but through administration costs, marketing costs, HR, premises, all those different things. And you can even cross-train some of the crews in all these businesses to do some of that work. So roll-ups are an incredible way to build value in doing deals. And again, there's been lots and lots of trainings around that we've done. So if you're new to Protege, make sure in your spare time you're checking out those training recordings in the archives, where I'm even building the models, built a model for you so that you can do a roll-up yourself. So there you go. Tracy's right. Carl, no driving boats, no running businesses. Great advice from Tracy.
Tracy also says the Protege community is best in class. So thank you, Tracy. 100%.
They are. They're a great community. I love these guys.
Drew says, amazing answer, Carl. Thank you so much. This is a cool feature. Well, awesome. Let's keep going on a couple more things here. I would just tailor on the back end of that last conversation is if it's a marketing agency roll up, make sure you choose an industry that really, really needs marketing and can't survive without it, where maybe it's high transaction volume, or it's something where people are always needing new customers. So maybe a marketing industry or working with an industry in the roll up with marketing around it, that's not as much on recurring revenue, but needs multiple transactions. Otherwise, you'll kind of work yourself out of a job, and you can charge a lot more when the businesses need new client flow all the time. So that's just from my experience. I'll just tell you that real quick. And I have a little bit of experience in marketing. CJB says Protege is the real deal. Learned a ton. He's got a deal he should be hooking up soon. I think it's just cool. All right, so let's keep moving here. A couple more questions. We had some around hiring, and I'm going to go over that for you, even if after Carl hops off. Joshua did say, what are the top 5 horizontal skill sets that we should be developing or honing in on? I have a training around that, so I will send you a training on that. We'll go over that soon. But while we have Carl here and Jeremy, I'm trying to find the next question. So many comments.
Paul Hollins, my man.
Okay.
Paul and I were partners. Yeah, Paul and I were partners in that deal. Good to see you, Paul. Hope Paul is well. Paul's down in London. There was a question earlier in the chat about what's my outlook on the UK. So the UK is still a great place to do deals. There's lots and lots of businesses for sale. About 425,000 versus the 2.4 million that we've got in the US. But clearly, the UK is a much smaller country. You know, it's 25% of the population. So there's around 25% of the deals. We still have a lot of the same trends. Interest rates are a little bit higher in the UK. So you might want to nudge up your debt service cover ratio maybe to a 1.7, 1.8, just to give you that extra cover. But there's tons and tons of financing in the UK. The UK's just developed, 12 months ago, its own version of the SBA 7A loan program. So the SBA, as you know, it's a government agency. In England, we have something called the British Business Bank, which again is a government agency. They're taking retail banking money to Barclays, HSBC, Lloyds, etc. in the UK. And then the UK government is underwriting between 70 and 80% of that debt. And then one of the things the UK has, which is amazing, is it's got a very, very mature, very inexpensive personal guarantee insurance market. So even if you have to borrow money and lenders want personal guarantees, it's cheap as chips to get that risk taken away. So a lot of professional services deals in the market in the UK. I'd stay away from transport for sure, because anything that's kind of heavy use on energy, a lot of the UK's energy comes from Russia and Ukraine, and obviously it's not at the moment because of the conflict over there. So fuel prices are, crazy over here. So as long as you stay away from stuff that's heavily energy dependent, the UK is still an amazing place to do deals. As is Australia, by the way. I was in Australia for 2 weeks. I got back on Tuesday, and what a freaking country that is. There's literally no unemployment. Everyone gets paid insane amounts of money, so they can all afford to pay a lot of tax. So the country's so clean, and it's got all this money to spend, and it's just an incredible place to do deals.
Hey, real quick, you mentioned the SBA, Carl. If people weren't on the Foundations call last Friday, go back and rewatch that with David Marcantonio. Yeah. There's a ton of changes that the SBA is going through that are game changing. So I'd encourage everybody to go back in and watch that training.
Yeah, they're trying to make it as easy as possible to leverage that capital to do deals. And they have to do it right, because in the US right now, we have a selling pandemic. You've got 2.4 million businesses for sale. There's only about 200,000 buyers. So there's far, far, far more many businesses for sale than there are people that know how to buy them, right? So they're trying to make it as easy as possible for sellers to transition out and transfer that wealth. It's forecasted there's going to be $10 trillion of wealth transferred over the next 10 to 15 years just from the baby boomer industry. Yeah. So governments via the SBA, and the UK doing the same thing with the British Business Bank. They're trying to make it as frictionless as possible for entrepreneurs like us and business owners like us to get the capital that we need to be able to acquire these businesses.
Yep. And every lender, even though they might be doing an SBA deal, you're trying to get an SBA deal, depending on the bank, they have certain kind of thresholds that they're looking at. So just because one bank says no to a certain deal structure for an SBA loan doesn't mean another one won't do that deal. So it's not, standard SBA. It has to be this way. Each bank has different requirements. So that's just something to know as everyone's looking for financing.
Hey, one more quick question. Can we hit this one? Jeremy, maybe you want to answer this one as the CPA. What are your immediate thoughts, pros and cons when looking at different business structures?
Yeah, it just that I'm going to give the standard CPA accountant response. It depends on the situation. But, typically if you're going to bring partners into the deal, I stay away from S corps. Usually partnerships, LLCs, taxed as partnerships are going to be the most flexible way to do things. If you're a single owner buying the business, typically an S corp is most favorable. There are certain ways you can take advantage of, reducing self-employment tax, those types of things. In terms of C corps, I typically stay away from C corps unless they're startups, just because of the double taxation potential. If it's hard to get it's hard to get cash out of the business in a tax efficient manner. If you're going to be a C corp, typically, if you're going to be a startup and you're going to reinvest the cash flow back into the business, a C corp might be beneficial. Plus, there's certain ways to, if you're going to sell it into the future, tax efficient ways to do that. But I would typically recommend either LLC, taxed as a partnership, or an S corp.
Yeah, I don't think Carl has much to add to that.
No, exactly the same for me.
Carl,
guys, I've got to bounce. Yeah, I've got to be at the dentist in 13 minutes. One of my teeth came out. Well, this is how frugal I am at times, guys. I was in Australia and one of my teeth came out, and I went to the dentist in Australia, and they wanted to charge me $6,000 to fix my tooth, right? $6,000, because my insurance in England wouldn't cover Australia. So I've been dealing with the toothache, but I'm going there in 12 minutes to get it fixed. So
yeah, go do it.
I want to save $6,000. So
yeah, fair enough.
But hey, I love this format, guys. This was amazing. Maybe we do this once a month.
Yeah, I think we should. Yeah, I think we should. We have some people on here, Carl, that aren't in Protege either. So for those of you watching, this is just a glimpse into what our Friday calls look like. Usually it's a specific topic. It was going to be on financing today. We decided to do a Q&A, so we're still getting a lot of questions coming in. So just doing things a little bit different. We will cover financing. We'll reschedule that, but love to have you a part of the program. So Carl, enjoy the dentist. Jeremy and I, there's several more questions. I've got about another 10 to 15 minutes I can stay on and answer.
Cool.
Yeah.
Hey, just before I bounce, should we talk about the Newark event real quick?
Yeah, let's do that. So the Newark event coming up, Dealmaker Weekend, which is Carl and I have a partnership with Abraham and Pace in Niton, and we have these big, amazing events. People who've been to the events already know how unbelievable they are. We do have kind of a little section of the tickets kind of partitioned and set aside for Protege. So if any of you have an interest in going, huge discount, 60% off the ticket.
Yeah, it's like $1,200.
Yeah, it's for a 3-day mastermind. Pretty wild. And that's for everything. That's for the fun, the big package. So
yeah, so it's a great place for you to network and find partners. We've got lenders and a whole bunch of other people coming to these events as well. And for people that are new into this deal making journey, what's really powerful about these weekend events is it's total immersion over 3 days. So these are 10-hour days. We get through a lot of stuff. It's like you walk in knowing nothing and you come out having been immersed in 30 hours of deal reviews, of strategies, of networking, of all the amazing things that we do. So if you want to get a massive fast start into your journey and really master a lot of the principles and concepts and tools that we use, I highly recommend that we do it. Normally, we don't invite proteges because you're in the protege 12-month community. We do have our annual protege event, which is a free event for you to attend. That's at the end of September in Georgia. There'll be a lot more stuff about that coming forward. But definitely, if you want a massive 3-day immersion on deal making, if you want to meet myself and Chris and Jeremy and our partners, Abraham Gray, Pace Morby, and Nitin, definitely get to Newark. And the hotel's right on the airport, Chris, isn't it? So you can just come hang with us. And we'll be doing a Protege live meetup and workshop on the Monday as well. So it's more like a 3.5-day event. But I'm really looking forward to it, which is going to be amazing. So guys, have a great rest of your Friday from me. Chris will drop the link in if you want to come to the event. I'm sure Chris and Jeremy are going to stay for a little bit longer. I've got to run off to the dentist. I'm going to have to drive pretty quick to get there for 5:30. But have a great weekend, everybody. And I will see you guys soon. So I'm going to leave the studio now. I'll leave you with Chris and Jeremy. Have a great weekend, everybody. Until then, bye-bye for now.
Awesome. Hey, well, a couple questions I want to answer. I saw a couple of them. Specifically, Belinda had some around teams, like how to build a team, how to find the right people. Also want to go over some more stuff. I saw Jeshua had some good questions, so we'll go over that. When it comes to the Dealmaker weekend, I'm going to post the link here in the chat. You guys can go and join us if you want to. What's so cool about this event is it's all different people. This is this is a whole bunch of people that you can meet outside of Protege. Almost all of them are real estate investors. A lot of them are looking for partnerships, and a lot of them have capital. It's just a really great place to network. I actually spoke to several proteges who went to the last one we did in Tampa, said best event yet, and they met several new business partners. And a lot of people here in Protege right now came to us and first found us from that event. So I just thought that was really cool. And it's literally 60% off the normal ticket price. So if you guys want in on that, we only have, I think, 10 to 15 spots available total for Protege. And the reason why we're doing that is because, first of all, it's almost full. The event is literally almost full. Number two, this is really a big investor event, and we just only have that many spots available. So you can see here the normal price is silver, gold, VIP, $1,500, $3,000, $7,500. For Proteges, the gold package is only $1,200, like super cheap. That's dinner, that's lunch, entertainment each night, transportation, workbooks, swag bags, the whole thing. VIP is the full experience, front row, a lot more time with me, Carl, Pace, and Abraham. Special extra day. You get invited to hang out with Abraham in Atlanta and schedule that. It's pretty cool. So I'll drop you guys a link on that. If you want to join in, great. If not, no problem. We only have a certain number of spots, so not everybody's able to get one. Several of you have already signed up for this, and that's why I only have like 10 to 15 spots left there. Okay, so let's keep going. Couple questions. One of them, Joshua said, what are the top 5 skill sets, those horizontal skill sets we were referencing that would really help someone be better positioned for maybe consulting for equity deals, as well as just having people maybe seek you out and want to be partners with you because you have that much value you can add to their business? Does that kind of summarize that, Joshua? I'm imagining you shaking your head. So a couple of things that I would say right out of the gate, and Jeremy, I'd like to hear your feedback too, because your skill sets are very horizontal and they would work everywhere. But the biggest thing that I think what people get attracted to me when it comes to partnerships is I have the ability to grow practically any business. So I think business growth is definitely a really big part of it. If you go back to the list of what business owners want that we've talked about several times, being able to match your skill sets with what people want is such a big focus for what I'm doing. And I think business growth is huge. I think lead generation is huge. Being able to build and deploy sales teams and systems is really big. Understanding human-computer interaction, customer avatar research, customer experience design. I'm just going to keep listing them off for you. I would say understanding how to really lean out a business, kind of like a Six Sigma or lean type strategy where you can go in and make things a lot more efficient and you can increase profit margins without having to have any new customers is huge. Having the ability to influence back-end sales and cross-sell customers that you already have that you've already paid the cost of customer acquisition to. So there's all types of different type of skill sets in business growth, marketing, specifically digital marketing, building sales teams and systems, really being able to enhance offers, make businesses more profitable by a lean methodology or some sort of practice, that type of thing, right? And that doesn't mean all of you should go out and become consultants. I don't think you should, but in general, those type of skill sets can make you very dangerous and very needed and wanted in almost any business. Anything to add to that, Jeremy?
When I work with clients looking to do deals or they're looking to grow their business, those types of things, I really try to be the quarterback of, helping them. So what I do well is I know a lot of people that are very good at what they do. So getting connecting them with the right people to, help them achieve, what they need to do. So if I'm looking at a business, the three main areas that I'm looking at are, sales and marketing. Depending on the type of the business, you may need to split those up because, sales and marketing can be very different. Ops is key to any business, and then the finance function. Typically, I'd see the person handling the finance function, they're overseeing HR, probably IT, and then obviously accounting. So, do you have, key people within those organizations to run those functions? And then if you're trying to help that business grow and they don't have those people, how can you connect them with the best people to help them get to where they want to be? So, and then having a person to actually integrate, all of that stuff. That's the other problem is when I meet with clients looking to grow, they're all ready to go, take the business to the next level. You talk about all these things, but they don't have an actual person to integrate, what you talk about, what you put down on paper, and those types of things. So making sure that you identify that person that's going to integrate all this stuff.
What a great segue into the next question. And Belinda, I'm just going to kind of paraphrase and maybe ask it in a different way, but you kind of, how do I find the best staff to do the work for you? And I'll tell you, I mentor a lot of people, even outside of even this big group. I talk to people daily, and I'm really trying to help people understand kind of the journey I've been on. And this is a big part of it. So one of the people that is really close to me, a good friend of mine, we work together, Lorian, we talk about this all the time. I said, you're very, very talented, but until you have the ability to have the same quality of output come from somebody else's efforts instead of yours, you'll never be able to build an empire. So what I do every day is I'm leading leaders and building an empire out of finding talent. So if I would say back to Jeshua's question around what's one of the best skill sets you can have, I think Justin Coble and I had this conversation yesterday on the phone, is finding talent, having the ability to spot talent, cultivate talent. And then one of the other big things is building systems and processes and allowing the process to shine where you can have subpar talent come in and really thrive. What a lot of people do is they go out and find really great talent of these unicorns that are so amazing. And then when they leave, you're screwed, right? But instead, when you find those type of people, you want to really get in and create processes around why it's working, what magic do they have, and how are you able to tap into that with pretty much anybody instead of just them? So what I would say for you, Belinda, is one, I would start researching around how can you be a great talent scout? And then also you need to find that integrator or find that person who's amazing at systems and processes and documentation, and learn how to, any business, can you turn it from something that's really relying on a person to instead bottle up that magic into a process so you can teach it to anybody. That will add a lot more redundancy to any business that you're a part of. One of the questions you may be asking as a part of this is more around a deal team. Like, how do I find these people to do the stuff for me? And if that's your question, there is a training inside of Protege that Carl's done probably several times around building your deal team. You message support or go look in the archives, you can find it. If you can't find it, message support in Slack, and then they will send you a direct link. And it's a really, really good training. So hopefully that helps a little bit. But I think my big takeaway there is one of the best skills you can have is building teams. That's the biggest skill that's going to really take you a long way. I was talking to somebody a couple of days ago, and they were asking, we were talking about some consulting and things. And I said, well, how many people wake up every morning and are growing your empire? How many people are waking up every morning and they don't even get paid unless they're really growing your empire? And they said, well, 0. I said, well, I have a lot. We have over 37 in the businesses I own part of that wake up every day and all they do is sell. And I've got over 500 employees. So at the end of the day, could I have done any of that if we weren't skilled at building teams, right? And at the end of the day, if you're working a W-2, you're building somebody else's empire. And that's why we're all here, is buying businesses and being business owners. We want to build our own, right? So I think that's the key skill set above everything else. Like if you're that person that someone calls when they know they need to build a team and build a team fast, that's going to be super effective. That's going to be a very valuable skill set. And then I love this, this answer. You want to be able to say, I'm the girl or I'm the guy you call when you need blank, right? So when I try to niche into a skill set, I want to be able to say that to somebody really easily and clearly, right? When someone says, what do? You say, well, I'm the guy you call when you need blank. And you have to learn what that is, right? I'm the guy you call when you need to scale your business when nothing else has worked and you're at a plateau. I'm the guy you call when you are ready to take your business to the next level. You have no way how to staff it up and build a team, and I take care of that for you, right? That type of stuff is very powerful. Cool. Any more questions here at all? And Belinda, you're welcome. I see. Say thank you. Thank you for the good question. Trying to think if there's anything else that we can talk about. One of them is, I can't pronounce your name because I'm terrible at it, but it says realty at the back. You asked about suggestions to focus on once you've purchased a business and what do you do to blow it up? Look in the chat. I gave you a link to one of my podcast episodes where we talked about scaling after acquisition. I also have several talks I've done on that in the past that should be really helpful for you. So you can message me on Slack. Anybody else have anything to offer? Any questions? Jeremy, you got anything to say?
No, I think I'm good. I'll second what you guys said. I love this format. Pretty cool.
I think we should do it at least once a month. I don't think we should do it all the time. I think doing it on Zoom is a little bit more interactive, but maybe next time we can pre-can several people with questions, bring them in here to the studio and do that. So love it. See Edward, Eddie, what's up? Gregory, thanks for being here today with us. Everybody else. And I guess we'll see you on the Monday call. Have a great weekend. Steven, expect a call from me at 6 a.m. while I'm fishing. You're definitely my muse and good luck charm for some reason. So that's your new role. And I've got a seller conversation in a meeting, so I've got to run.
See you guys.
All right. Thank you.